Welcome back to the channel. If you are an investor based in Europe, you know the struggle. Finding high-quality dividend ETFs that are actually UCITS compliant can feel like a part-time job. This is exactly why I am launching a brand new series today. Over the next few weeks, I'm going to deep dive into the best European-based ETFs so you can build massive passive income streams right here in the European Union. We're kicking things off with TDIV, which is the Van Eck Morningstar's Developed Markets Dividend Leaders, ticker TDIV. So what is TDIV? TDIV, as you can see in the prospectus, is a Netherlands-based UCITS fund that tracks the Morningstar's Developed Markets Large Cap Dividend Leaders Index. Its asset under management is at about 5.6 billion euros as of January 21st of 2026. The fund was created in 2016. It rebalances frequently at twice a year, so every 6 months it audits its holding twice a year then, and if a company cuts its dividend or misses the sustainability rules, it's out. No emotions, just pure data to build passive income. The current expense ratio is at 0.38% for a fund that uses physical replication, actually buying the stocks. This is very competitive. The dividends are distributed quarterly, so every 3 months, making it perfect for consistent cash flow. Let's look at why it beats the standard index funds right now. The PE ratio of the S&P 500 is currently between 19 and 22. TDIV sits at 14.78% as of early 2026. This gives us massive margin of safety for both capital appreciation and dividend growth. And it's not just a US play. While the US leads at 24% of the holdings of the ETF, you're also heavily invested in the UK, in Switzerland, in France, Germany, Japan, Canada, Australia, and other markets. And now when you look at the top 10 holdings, you're owning the world's most reliable cash cows. Names like ExxonMobil, Verizon, Pfizer, Roche, Nestle, and Allianz. So you can see heavy exposure in oil and gas, in pharma, in food and beverages, as well as in insurance. So all these industries are very stable over time and no matter the geopolitical situation. And here I just want to show you that I don't just talk about the numbers and show you a prospectus. I am actually heavily invested in TDIV. As you can see, this is my second biggest holding right after the Vichy property dividend stock in the US. And I want to show you just a few numbers about my total returns. Today, the market value of my holdings is at $16.5 thousand US. I own 278 shares of TDIV and I bought the fund that is based in Netherlands, so where it is native. My total return is at 19.91% and the price return is at 18.12%. My yield on cost, because I bought early, is at 4.08% with a current dividend yield of 3.4%, and the fund has paid me $377 since I bought it first in September 2024, and the estimated total annual dividend is at 545. So the snowball is really real for me, and it can show in the table that I just showed you. While the 1-year dividend growth is a bit slow at 1.75%, the 5-year average growth is very close to 10%. This is how you build true wealth over the long term. Is it a buy today? The fund has seen some very good appreciation at 24% in 2025 and 20% in 2024, so it is slightly overvalued in the short term. So my strategy, basically, I am DCA in, so dollar cost averaging, and reinvesting every single dividend to keep the compound interest working. If you want a tax-specific deep dive for your country, whether you are in Germany, in France, or the UK, drop your country in the comments below. And don't forget, this is only part 1. In the next video, I'm looking at Dividend Aristocrat ETF that might be even better for certain tax bracket. Hit the like button, subscribe so you don't miss part 2, and I will see you in the next one. Bye-bye.